Hi everyone, a very good evening. So it is extremely a pleasure to see you all at this 118th edition of Zen Tax Talks. So we had our Chief Knowledge Officer CAP Prashant Surya to address the gathering today, but due to some unavoidable situations, CAP Prashant Surya is not able to be here, and I hope to deliver justice on his behalf. So the topic or two topics for discussion today, one relating to the latest changes that are set to come with respect to e-waybill, and the other very important deadline that is as well coming on the 31st of July, the extended timeline on both regards, primarily with respect to the GSTAT appeal filing. So here we have with us our expert speaker, CA Divya Prabha, who will take us through the GSTAT appeal filing. So to cover the first portion of the discussion relating to e-waybill. So am I audible? Are you able to see my screen? I would like to get a positive confirmation so that we would be able to move forward very quickly. Great. Yes. Thank you so much. Thank you so much. Right. So e-waybill has been a system that has been in set practice for a reasonable good amount of time. And I would definitely say the trade and the industry are now reasonably set to the practice or the best practices and the expectations of the government with respect to raising of the e-waybill. But now, this new change makes us revisit our entire understanding of how an e-waybill needs to be raised, when we need to select certain specific options, and also one more important aspect of not just letting the e-waybill get completed by itself, taking some proactive measures to ensure how the e-waybill actually gets closed. So far, it was only and only about generation of an e-waybill, and thereupon there was no actual closure to the e-waybill process. But now that e-waybill closure process is also being brought into the system, which though at the moment is voluntary, but there is every chance that this becomes a mandatory closure process so that there is much better traceability and visibility and tracking within this entire e-waybill process. So it's been a very long time that we had a very detailed webinar with respect to e-waybill, and therefore our primary objective is that we will start with the very basics of e-waybill. Tejas, I just understand that my voice is not clear. Is it everyone else having a problem, or sir, is anyone else having a problem with my voice or clarity of my voice? Okay, so I don't see any other. Great, it's all good. Tejas, I think you can also check at your end, right? So what is it that we are going to be looking at is with respect to the e-waybill, the entire aspect of the entire discussion. So the basics and where the legal provisions actually come from. This is extremely very important for us to understand, basically because is there any change in the law that we are looking at today? Or what is the basic change that you are actually trying to really cope up with? What is an e-waybill? It's an electronic document. E stands for definitely an electronic document, which is generated on the common portal, which is nothing but the e-waybill portal for the movement of goods, generally where the consignment value exceeds rupees 50,000. In case of certain states, the intra-state value has been modified to rupees 1 lakh. This is essentially the permit to show to the officer that this is the goods that are moving to such and such location. E-waybill is generally a 12-digit unique number. So earlier, before the introduction of GST, all of us would know generally each state had their own transit pass or their e-waybill system, right? That was a completely different era where the goods for movement within Tamil Nadu had a completely different system. Within Kerala, the system was different. Within West Bengal, the goods system was different. So each state had their own system with respect to generation of transit documents. Now, after the introduction of GST with one nation, one tax concept, and as well with the introduction of e-waybill, we simply have a simplified structure which is across pan-India. right? So this is a single paperless movement document across India. To track the consignments in real time, the department can scan the invoice or the e-waybill to understand where the goods originated from, where the goods are moving to, and merely by entering the vehicle number, the department will be able to know whose goods are moving from where to where. So this is extremely the most important concept for us to all appreciate today, that the vehicle number which is entered in the e-way bill can be the basis on which the roving squad officers, the vehicle intercepting officers, the verification officers of the inspection wings of the various states will be able to verify whose goods are moving from where to where. In the process of this verification, there is a big difficulty for the department due to multivariate scenarios. And these scenarios are being addressed as part of these as part of this advisory, and these changes are now what is being brought into effect. Right? So before the introduction of e-way bill, we also had the concept of checkposts in each of the state borders. At each of the states, when the goods had to enter that state, the amount of time that the vehicle was stranded, that the driver had to wait to pass through that actual commercial taxes checkpost was extremely very high. Right? So therefore, the introduction of e-way bill removed all the checkposts. Therefore, goods are able to move up very faster, and as well to build an auditable trail of what was moved from where to whom. This is all the basics of what an e-way bill is all about. I'm sure that now today all of us are very well accustomed to what an e-way bill is all about. But predominantly, once you understand why it was introduced, and then I really explained to you what was the problem, then you will be able to appreciate why it is required. So an e-way bill was introduced primarily with the objective to track the consignments in real time and to curb the tax evasion. A major problem arose that vehicle A carrying the goods of myself. I am sending the goods in the morning at 10 a.m. through vehicle A. The goods are delivered to the customer at 12 noon. I generated the e-way bill for my consignment. The e-way bill is valid till the midnight of that date. Let's assume it is valid till the midnight of today. The same vehicle is used by another customer. Say, for example, Divya Prabha from our team is using that same vehicle for transporting goods, say at 2 p.m. today. The goods are moving with another e-way bill, the same vehicle. When the officer tracks the vehicle, he will be able to see there are two valid e-way bills. One generated by me for movement in the morning, the other generated by Divya Prabha for movement in the afternoon. But my delivery has already got completed. Therefore, when they look at their system, there are two e-way bills for that same vehicle number, but actually in the vehicle, there are only goods of Divya Prabha because my goods have already got delivered to the customer. There is always a discrepancy between what is shown in the system for the officer as what could probably be there in the vehicle, but vis-a-vis what is actually there in the vehicle. So this difference was always there. This tracking became a problem, number one. Number two, generally, all of us are now very well accustomed to the e-way bill system where we bill the goods to A. Say, for example, A bills the goods to B and he supplies it to C. Multivariate scenarios could be there, that B itself has a separate location, which is a separate warehouse, or B tells, I don't want the goods, you directly deliver it to my customer address, which is C. He does not want to say the customer's name or the GST number, but he is just giving the address and it goes directly. See, on the direction of A, B is sending the goods to C. Goods have reached C. Now the department has the real worry. The primary objective, one of the very important objectives of e-way bill is to curb tax evasion. From A to B, it is a B2B transaction. Between B and C, the transaction is not very clear to the department, whether it is a B2B transaction or whether it is a B2C transaction. Whether B will raise an invoice to C or whether B has already raised an invoice to C. These factors are not very clear to the department when they look at the e-waybill, because the goods are being sent from A directly to C using the bill to ship to model. But whether the invoice was raised, what accountability is there for the movement for the invoicing between B to C is not clear. These two problems are the fundamental basis for this entire discussion today. So for curbing, for arresting, for facilitating the department on these two issues, we have been issued a GSTN advisory, which we will be looking into. So when I'm going to talk about the changes, first, what are the legal provisions that are actually in place, right? First and foremost, my e-waybill has two parts. Part A, which captures the details of the invoice number or the document number, the value, the HSN, the address from which it is going, the address to which it is being delivered to. Then part B has the vehicle and the transporter details, right? So this is how the e-waybill has always been, and it continues to be so. The statutory framework under the GST is as so with respect to e-waybill. That is, Section 68 empowers the government to say that a person in charge of a conveyance needs to carry the prescribed set of documents. Rule 138 of the CGST rules provides that the e-waybill, how it is to be generated, who generates it, what is the form in which it is to be generated. The form is GST EWB01 that is being provided here. And we have rule number 138A to 138D, which are all relating to inspection and conveyance. That is, inspection of the conveyance and all those other detention and all those processes are carried for capturing rule number 138A to 138D. So with this being the background, is there an amendment in any of these things? When there is a change that is required to be done in the manner of generating an e-waybill, is there any change in any of these above? No, there is no amendment here, but this has come only in the form of an advisory, right? So what is this advisory talking about? First, let's understand what an e-waybill looks like in the e-waybill portal. This is the login page in the e-waybill portal. So inside the e-waybill portal, once you logged in, so you have the transaction details, which is the supply type. So e-waybill can be generated in respect of an outward supply or even in respect of an inward supply. The subtype is whether it is in relation to a supply, an export, job work, CKD, SKD lots, where the recipient itself is not known, whether it is for your own use, exhibition or fairs, line sales, others. So the subtype, multivarious transaction types are available. In respect of others, you can specifically type as to what is a specific transaction. What is the document type, whether it's a tax invoice, a bill of supply, or whatever is the delivery challan, whatever is the document that is relevant to the transaction, the document number, the document date, the billed from address, the dispatch from address, the bill to address, ship to address are all required to be captured. In addition to all this, we have something called as transaction type here on the right hand side. This transaction type actually says whether it is regular, bill to, ship to, whether it's billed from, dispatch from, or a combination of 2 and 3. So it is in respect of this particular transaction type, depending on what transaction type are we actually choosing, when we need to choose that particular transaction type. Otherwise, it changes the entire concept of the transaction type as well. With this in the background, we need to understand the entire presentation today. So as we move forward, first transaction is regular. That is where invoice is from supplier A to buyer B. The movement of goods is also from supplier A to buyer B. There is no requirement of ship to GSTAN. If at all there is a separate ship to GSTAN which is entered, then the request will be rejected and you will be shown an error message. Second transaction type. It is a bill to ship to transaction, that is, invoice is from supplier A to buyer B, but supplier A has been directed by buyer B to supply it to third party C. When A directly moves the goods to supplier C, instead of moving it through B, he is directly moving the goods to C, then this ship to GSTIN becomes mandatory. So is it a requirement that C should always be a registered person? No. C can also be an unregistered person. If C is an unregistered person, then it would be entered as URP, right? Unregistered person. I'm sure that many of you having generated e-wables will be very clear about this terminology. So the scenario is very clear that goods are moving from A to C, then it is not moving from B to C or directly from A to B. Then directly from A to C, since it is going, you need to enter the ship to GSTIN, which is becoming mandatory. If it's unregistered, you need to enter URP. Third situation, billed from, dispatch from. The bill is from supplier A to buyer B, but supplier A is not sending the goods from his location. He is sourcing it from third party D and directly supplying it to buyer B. In which situation is it required that the supplier GSTIN is updated? No. It is only and only in respect of a ship to party. Very clear. The dispatch from is not equal to ship to. Both are different. The dispatch from is different, ship to is different. Therefore, in this situation, there will not be the requirement to update the ship to GSTIN. Last situation, supplier A supplying to buyer B with respect of an invoice, but the movement of goods is from third party D to the fourth party C. Could be yes, in which situation as well, the goods are moving to another party other than the buyer, then the ship to GSTIN becomes mandatory. And all these provisions that I now explained, that is with respect to the mandatory entry of ship to GSTIN, is coming with effect from 1st of August 2026. So therefore, get ready, make sure that you are updating your ship to GSTIN in respect of bill to ship to or all combination types. Regular, you cannot enter a different GSTIN number at all. Right? Why is it tracked? As I already told you, for traceability, for audit trail verification. But basically, you can also understand that it does not change the nature of supply. It does not change the place of supply. No change on the tax rate. It is only a data capture for the purposes of the department. All other commercial tax treatments is completely unaffected. But when I say I need to enter the ship to GSTIN, the common and the important worry would be that, sir, in a very commercial transaction, how can I disclose my end customer to my intermediate customer or to my ultimate supplier? My customer, I cannot disclose it to my supplier. Then what is my role in this entire transaction? There could be a scenario where A and C automatically start talking to each other and the commercial agreement itself moves, not just the e-waybill. The commercial agreement itself moves between A to C and not between A and B. So that is where we need to understand that the government has been very thoughtful to ensure that the transactions are not fully communicated. The ship to GSTIN, which is the new additional requirement that we are now talking about, is not actually communicated. So this is again the same example, right? The same example where, okay, one more very important thing over here is that here A is selling goods to B in Bangalore, but B says ship it to C in Mysore. You need to enter the ship to GSTI. The scenario could be that A in Chennai sells to B in Bangalore. B says, don't supply the goods to my corporate office in Bangalore, my registered place of business, supply it to my additional place of business. Should I enter that as bill to ship to? Should I enter the GSTIN of myself in the ship to GSTIN? No, it is not possible. It is a regular transaction where the additional place of business is of the same buyer, is of B itself. Then treat it as a regular supply. do not select the bill to ship to option at all. Just put the delivery address in the bill to or the place of delivery field itself. It is not a bill to ship to transaction. Please note that this would be misleading if you put it as a bill to ship to transaction, because bill to ship to, the basic criteria is that the ship to GSTIN must have a different PAN number, must have a different GST number at least, must have a different GSTIN number other than the bill to GSTIN number. But they must be distinct persons. That is what has been stated over here. So talking about this confidentiality that I was talking about, it is completely hidden from the entire document, from the entire trade, is that the ship to GSTIN is not printed on the e-way bill, cannot be fetched through any of the government GST APIs, not shown to the taxpayers or the transporters. The trade name also is not entered in the e-way bill details. That nothing comes. When you see the printout of the e-way bill, it is going to be the same. But this detail is captured internally within the system for the officer to verify during the course of movement. The ship to address that was so far being shown continues to be shown. That could also have been hidden. The ship to PIN code continues to be shown. The ship to GSTIN is visible only to the authorized officers and can be used by the officers for enforcement and verification. So, who can enter the ship to GSTIN? Ship to GSTIN is mandatory. Say, for example, the same scenario that we have been talking about, A is selling goods to B, but A is asked to sell the goods, send the goods directly to C. If I give all the details of my transaction to A, that is my ship to GSTIN of C, then the commercial viability of the transaction may fail. Therefore, in all such situations, we go by the second option. The buyer does not want to disclose the ship to the supplier, then the buyer generates the e-way bill themselves as an inward e-way bill and enters the ship to GSTIN directly. Right? So this is the actual practical workaround in all these situations where the buyer does not want to disclose the ship to the supplier. So once he generates the e-way bill, entering the ship to GSTIN number in an inward e-way bill, that ship to GSTIN number is anyways not going to be visible to the supplier, to the transporter, and therefore that becomes completely a trade secret. Right? So the commercially sensitive information is completely protected. This is visible only to the departmental officers. Let's talk about an export or a merchant export transaction. With respect to an export transaction, the goods are sent to the port. When the goods are sent to the port, then you enter URP, because the goods are being sent. Say, for example, when we come to the examples as well, the goods are being sent to San Francisco, but it is to be supplied through the port, in which situation then it will be entered as URP. All other procedures with respect to the e-way bill will continue to be the same. The only point is that since the port is not an additional place of business of the buyer, therefore you will enter it as URP and send it to the respective port. In respect of merchant export transactions as well, generally in merchant export transactions, the goods will directly go to the port, in which case you will enter it as URP. Where it is not going directly to the port, but it is going to the location of the actual exporter or any other third party, then such third party's GSTIN number becomes mandatory. So therefore, be very cautious and do ensure that the correct process is followed with respect to export or merchant exporter scenarios as well. A domestic bill to ship to transaction, say for example, the supplier is Tata Steel at Jamshedpur, raising the invoice to Joseph Steels in Karur, who directs the goods to be shipped to Uday Constructions in Coimbatore. In which case, Tata Steel will raise the invoice on Joseph Steels. It is a B2B interstate IGST transaction. The place of supply going to be at Karur. The ship to GSTIN of Uday Constructions, if he is registered, needs to be mandatorily entered in the e-way bill to be generated by Tata Steel. If Uday Constructions unregistered, then URP needs to be entered. If Joseph Steels does not want to disclose the GSTIN of Uday Constructions in the e-way bill, does not want to disclose the GSTIN of Uday Constructions to Tata Steel, then it can take the responsibility of generating an e-way bill, and thereupon the goods can be moved. Second example with respect to export, Pavanyans from Hyderabad sells it to Walmart in USA, but the shipment is going to be through the Visakhapatnam, the Vizag port. In which situation this being zero rated supply does not get changed. The overseas buyer continues to be Walmart. The ship to GSTIN will be URP and the goods would be sent to the port. URP is just a mere e-way bill entry that does not change what the export transaction is all basically about. So this does not change the transaction. This is only about the e-way bill transaction. So whenever you are generating it through the system, these error codes are for system people. The respective error codes might be shown when you are generating using the e-way bill API or the e-invoice API. Depending on that, the error codes are being shown in the presentation. I will share this presentation also to you, but this is all more relevant only and only for a person who's building tech, and he gets this error, he would be able to solve this error appropriately. So practical scenarios, a couple of practical scenarios with respect to domestic movement. Interstate B2B or intrastate B2B, where it is to their buyer's own site, not required. The ship to GSTIN is required, is not required. Branch or stock transfer within the same GSTIN, not required to have the bill to ship to. Third party billing, or we call it as drop shipments, then yes, ship to GSTIN is required. Where the delivery is to an unregistered consignee, yes as well, ship to GSTIN is required, but it would be URP. In respect of job work transactions, goods sent to job work on B's order, yes, where the job worker is registered, his actual GSTIN, ship to GSTIN needs to be captured. Where it is dispatched C to delivery D, that also ship to GSTIN is required. Bill to whatever is a chain reaction, ship to GSTIN is required. Merchant exporter also ship to GSTIN is required, or it would be the port, it would be the URP. Cross border or some special transactions, direct export to overseas buyer, yes, you would enter it as URP. Import e-way bill, it would not be required when it is moving directly to the buyer's premises. Where it is supplied to an SEZ unit, yes, the ship to GSTIN would be required, where it is as a ship to location. Where it is partial or multiple shipments as well, yes, there again, where it is moved to a location other than the location of the buyer, then the ship to GSTIN would again be required in that scenario as well. So this is all with respect to the entering of the ship to GSTIN. Now we talk about the voluntary closure of e-way bill. What is this all about? Right? This lets any person who is the supplier, the recipient, or the transporter to voluntarily close the e-way bill once the delivery is completed. At the moment, it is not mandatory. So generally, the closure of the e-way bill is done one day, can be done up to 1 day after expiry. But the best practice is to close it on the date of delivery. You have received the goods, and it is the best practice to close the e-way bill immediately, right? So going forward, whenever a GRN is being made at the factory, it would be the best and appropriate practice to also close the e-way bill in the portal. So e-way bill closure, you can select one e-way bill and close it, or view all the e-way bills for a date and close all the eligible ones. So you can close multiple e-way bills together, or they are also talking about where the driver can close those e-way bills if he is able to link it with his mobile number and search it. This we are yet to see it actually practically. But once the goods are being delivered and it is completed, the driver might be able to close those e-way bills. So, but at the moment, the closure of the e-way bill is voluntary. The providing the mobile number is optional. So this can be given at the time of e-way bill generation. They have said whether he can close it via API. No, he cannot close it via API. Just 2 minutes. 2 minutes. Right. So Closure via API, yes, also it is possible for system integrators. So for bulk closure, they can use it. Multiple e-waybill numbers are required. So ultimately, they cannot close all the e-waybills today. You need the e-waybill number for closing that e-waybill. What is the closure date, right? So you can enter remarks also that the goods are received and then also close the e-waybill. You could see that there is no field as to indicating who closed the e-waybill, whether it's the supplier, the recipient, or the transporter. But then we need to really wait for this system to evolve. Right? When compared to current day system, that is with respect to e-waybill closure, cancellation, and expiry, all these three things are very different. Closure is where an action is taken by the person to record that the goods have been received or the goods have been completed delivery. Cancellation is where someone has wrongly generated an e-waybill or movement itself did not take place. Expiry is where there is a set time limit for the validity of the e-waybill, and after that it is treated to be expired. Expiry is automatic, and every one of us know that based on the distance, there is a set validity of the e-waybill, right? So, but all these three things are very, very different. After the goods are received, don't please cancel the e-waybill. Cancellation after receipt is completely different one. Closure is different. Cancellation is very different. Please do not cancel an e-waybill after you have received the delivery of the goods. You need to only close it, not cancel it. So some common mistakes to avoid with respect to both the topics. Same GSTIN in ship to bill to fields, not possible. Omitting the ship to GSTIN in the bill to ship to transaction, please don't omit it. Write the correct GSTIN if you have the ship to GSTIN details, or enter URP. If it is confidential, ask the buyer to generate the e-waybill and give it to you. Sending ship to GSTIN in a regular supply, don't do it. If there is a ship to, make sure that you type ship, that you select ship to in transaction type and do it properly. Sending ship to GSTIN in bill from or dispatch from, don't confuse what is dispatch from and ship to. Dispatch from is where you are getting the goods itself from a third party, where ship to is you are sending the goods to a third party, right? So both these things are different. So treating a delivery to buyer's own godown as ship to, that is not the concept. Where the GSTIN of the bill to address and the ship to address is same, it should be entered under regular, only the address needs to be correctly updated. When the ship to GSTIN is different, make sure that the PIN code actually matches there. So when it is with respect to export, make sure that you enter IRP, not under the ship to GSTIN number. Right? Don't assume that URP converts an export into a B2C supply. Don't worry, it is an export and it will always be an export. In the e-waybill portal also, you can specifically select that it is for export. Therefore, don't really confuse both. B2B and ship to details after. Don't change B2B and SCZ because this is linked to your GSTR1 zero rated supply as well. Don't confuse both. Right? Wherever required, if it is not a commercial secret, share the GSTN number of the ship to address to the supplier, right? And don't share something wrong. That could also be a problem. And don't cancel a delivered e-waybill instead of closing it. Rely on post-closure edits that will later be blocked, right? So, don't rely that on after closure, you can edit it. Now, you cannot edit it. Now, you are allowed to edit even after closure, but going forward, that editing option will not be allowed at all. So nothing would be possible once you have generated the e-waybill. Don't really do any editing. Don't really try to do any editing after you have closed or generated the e-waybill. So these are some of the important topics from my perspective. Now we have with us our expert who has filed n number of appeals in the new GSTAT portal, has had her hands deep and worked on the ground with respect to the filing of GSTAT appeals. So we have with us CA Divya Prabha, who will be able to share her practical insights of experiences with respect to GSTAT filing. So if there are any questions with respect to the e-waybill, we will take it up at the end of the session. So since I have to disconnect from my video. I would not be fully available on video. Best wishes to Divya Prabha for this session. And thanks to everyone for being here. Thanks for being a wonderful audience as always. Thank you, everyone.
Good evening, everybody. Thank you, sir. Thank you for the wonderful session and the introduction. Hopefully, all of you had a better clarification on what the latest advisory on e-way bills has said about the shift to GSTN requirements and also the option on voluntary closure of e-way bills. Now, this session will be all about the GSTAT appeal filing, more about our experiences with filing and some very basic and little nuances of what we have to keep in mind while going for the GST appeal filing within 31st July of this month. So I'll share my screen now. Please do let me know if it is visible. Hopefully the PPT is visible to everybody. So yes, when it comes to GST Appellate Tribunal filing, the very first thing that everybody thinks is from the inception of GST, we all knew that there was a higher forum. There was something that is beyond appellate authorities, and that is called the GST Appellate Tribunal. It was in existence through Section 109 of the GST Act. But what is very astounding is that it's been 8 years. It was 8 years, and we did not have any idea as to how it will come into effect, how it will be functioning, how should the appeals be filed. So for almost a decade, we did not know how the second appeal filing would go about. So what was the other only option available for the appellants was that writ petition with high courts, which the writ petitions to high courts was not even supposed to be heard by the high courts because all those cases were about question of facts. It was not even question of law, and but still due to the non-existence of the appellate tribunal, the high courts had to take up these cases also. And then came a clarity in late 2025, specifically in September 2025, where GSTAT was formally launched, and the e-filing portal also went live at efiling.gstat.gov.in. But still, only during February 2026, the principal bench located at New Delhi and all the other state benches, they started their adjudicatory operations. But another astounding fact is that even from February 2026, that is this Feb 2026, what opened was 4.83 lakhs of backlog appeals. That was the second appeals pending for over a period of 8 to 9 years. Around 5 lakhs was pending. And there was another data saying that 2 lakh appeals were projected to be filed within 30th June. And all the state benches of 31 state benches and 44 sittings among those 31 state benches, along with the principal bench at New Delhi, everything ramped up together and came into effect. And all the members were also allotted benches by the order of December 2025, and they were directed to join by 21st January 2026. But the reality was that only 30,000 odd appeals were filed by the late or mid of June 2026, which also meant that another huge backlog of cases is still pending, and therefore an extension is imminent. So what happened was from Feb 2026, even though the portal, the appellate tribunal, everything came into effect, we were still filing into a system which was being built as we were using it simultaneously. Every other day, if any kind of error would come up, would crop up out of nowhere. We had to wait. We had to repeatedly check the portal for any new developments. And only 30,000 appeals were filed 15 days before the due date, and the maximum was 5,500 appeals in a single day. So this most probably led to the extension decision also. And as we all know, during the last days, the portal was doing its part to make it very difficult for all of us to file even a single appeal. Another thing to be considered here is that this GST Appellate Tribunal is India's first fully digital tribunal. That is, no more paper submission of offline documents like we do for first appeals. So what the rule says is that all appeals should be filed only in electronic form on the GSTAT portal. No physical filing counter, no paper bundle across the registry, and it will all be processed through the case information system and document management system. And what happens after the cases have been filed, heard, and a conclusion has been reached upon, the orders will also be passed and uploaded on the portal itself. It will not be any offline documents. So this portal has been digital from its very inception, and this is the first tribunal in India to be so. So what is the consequence of this being fully digital? See, initially the appeal was all about the arguments put forth in the drafting and in the hearing. But now the appeal, the discipline of the appeal has moved upstream. That is from the very beginning into how the records are assembled, how are the pre-deposits or the admitted amounts are computed, how are the indexations done for the records or documents to be submitted, and how are they being uploaded onto the GSTAT portal. So usually the hearing is where the case is argued, but now the filing is where it is very often won or lost. So now, if at all I want to discuss something specific in this session, it will be the following 3 points. So these are the 3 gates before the merits. Before the facts, we have to consider these 3 conditions or these 3 criteria before even thinking about drafting the appeals. First will be the limitation period. Is the appeal filed in time? And how are we counting the time limit for filing an appeal? Second would be the pre-deposit. Are we paying the correct amount on the correct base and also from the correct ledger? And the third one would be the documentation. As I said, this portal is fully digital, and therefore you can't just go back to the past or go to the future and say, I'll submit this later, or these documents are from prior years, so I need more time. Everything will have to be done at once, and it has to all be digital. So therefore, these 3 are much more important before we even consider the facts. And these are all equal, these are all very, as I said, these are all very important, but even facts are also to be kept in mind, because this will be the forum where you will have the last chance to talk about facts. Anything beyond this appellate tribunal will only be question of law, because you will be going to High Court and then Supreme Courts. You can't go argue the case based on facts. It will only be question of law. So let's discuss those 3 criteria or 3 conditions in detail. First will be the limitation, the date that counts. So it is not the 3 months from the date printed on the order, on the appeal order or the APL 04. It is 3 months from the date of communication or the notified date, whichever is later. What is this notified date? It is the section 112 subsection 1 as well as subsection 3 mentions something as notified date. And this notified date is, we'll talk about it in the next slide. So section 112 subsection 1 says 3 months from communication of the first appellate order, that is form APL 04, or the date notified by the government, whichever is later, shall be the due date or the last date to file your second appeal. So the notification, that is the date extension notifications and everything, they operate through this section. And section 112 subsection 6 provides for the period of condonation. It is 3 months and not 1 month. And this condonation should be of sufficient cause. The tribunal will only accept it based on its discretion. It is not going to be a mandatory condonation. And so therefore, before even thinking about drafting, what I think is essential is that it is the audit of the cases that we have in our hand, list them out, list their communication date, communication of the orders, and then based on the communication date, decide on the priority as to which is to be filed when. And Moving to the notified date part of section 1112, this notification talk is with regards to the 30th June due date or the 31st July due date. See, initially we had staggering windows of filing the appeals. That is, it was said that any orders passed before each date of a particular financial year will have to be filed within so and so months. But that was rescinded, and then it was said that any order which was passed on or communicated which on or before 1st April is to be filed before 30th June. And then there came another notification to extend the due date to say it will be filed before 31st July. So currently notification number 3502 dated 30th June provides the specific due date extension. So appeals for order communicated before 1st May 2026, the due date is 31st July. And appeals for order communicated on or after 1st May 2026 is 3 months from the date of communication. So therefore, section 1112, it said 3 months or notified date, whichever is later. So for orders communicated before 1st May, 31st July is the last date, and we will have to file the appeals before 31st July, because missing this due date stops the right for second appeal. We cannot go for further second appeal, and the only option will be a writ petition, and that will also be limited to questions of law. And this 31st July is also a due date for the departmental application, that is for the departmental appeal for orders passed before 1st February 2026. Now, as we faced before this, before 30th June and on 30th June also, there might be technical difficulties in the portal in filing the appeals. And the order number 156/2026 dated 10th July has come up with a relief for this. It has given an option to the taxpayers facing technical difficulties on the portal to record their intent to file. That is, they should record that they intend to file the appeal by providing some bare minimum basic details, and then a token ID will be generated with the date and time of recording the intent. And keep in mind, this is not a substitute for the appeal. It only preserves the right to filing. Appeal will still have to be filed following all the required procedures. And how does this work? If the appeal order was already passed on the portal, we can directly enter the 16-digit ARN or CRN. If it is an offline order, you enter the order number or any reference number and the tax period. A separate token for each appeal has to be filed. One single taxpayer having multiple second appeals cannot go for one single token or one single intent to file all the appeals. Each appeal will have to be recorded with a separate intent to file. And important points, important caution to be kept in mind over here is that the tokens will lapse after 60 days, after which you cannot file the appeal, nor can you get another token. This is one-time option only, and it can be used for only one appeal, and you will have to file the appeal within 60 days from the token generation date. And any token with incomplete or inaccurate details will also be treated as void. So it is open to all GST holders, temporary ID holders, UIN or TDS registration holders. So the order and the portal, it states it broadly. The advisory frames the relief for those facing portal difficulties. Keep in mind, it is for portal difficulties. We can't take this as a general extension for filing the appeal. We can't say we have got the token so that we'll file it beyond 60 days. No. Only if you're facing technical difficulties or portal difficulties, please go with this option, because we cannot be aware of how the tokens will be cross-verified, or it might even be rejected. If you're filing it on 30th July because your draft is not ready, or if the documents are not ready, and if the portal was actually functioning very properly, your chance to file an appeal will be lost. Now, this is with regards to the limitations. Next comes the pre-deposit. So initially the pre-deposit was under section 112 was the 20% of the disputed tax. And then there was an amendment in 2025 which went on to say that the pre-deposit shall be 10% of the tax in dispute in addition to the pre-deposit paid at the stage of first appeal. So first appeal as per section 107 subsection 6 will be 10% of disputed tax, and the second appeal will be 10% in addition to the first appeal pre-deposit, but this 10% will be on the remaining tax demanded. That is, in the first appeal, the order could have demanded around 40 lakhs. 10% would be 4 lakhs. In the second appeal, in this APL 04, the demand could be 20 lakhs and this 10% will be 2 lakhs. And now comes a very important question as to say, if it is only going to be 20 lakhs and 2 lakhs is the only demand, my first appeal pre-deposit very well covers it because I paid 4 lakhs. Out of 20 lakhs, even if I put 20%, it is only going to be 4 lakhs and I very well covered it. Before 8th July, we did not have a very clear-cut clarification on this. But on 8th July, the GSTAT of the Cuttack bench, it ruled in the case of Manoranjan Das and versus Commissioner, Odisha Commissionerate of CT and GST, where it was held that the first appellate authority had substantially reduced the demand, and the deposit already made under section 107 exceeds what was required under section 112. Therefore, no further pre-deposit can be insisted upon. The requirement is computed on the surviving disputed tax. This was after following the Jharkhand High Court in the case of Ashirwad Food Industries. What happened in the Jharkhand High Court case was that the initial demand was around 24 crores. The appellant had paid 2.23. The initial demand was around 2.8 crores. The appellant had paid around 20 lakhs, 24 lakhs of pre-deposit. And in the subsequent order, the demand was raised to 40 lakhs. And the appellant went on to say that I've already paid more than enough of the remaining tax in dispute. I need not pay the additional 10% because I've already paid 20 lakhs and in 24 lakhs. And the remaining tax in dispute is only 40 lakhs. If I were to pay 10% on this also, it would exceed the cumulative 20% required. But the tribunal registry, it rejected the appellant's stand. But the appellant stood firm on their ground, and the tribunal ruled in the High Court ruled in favor of the appellant, saying this pre-deposit need not be required, and the order shall be considered, and the appeal shall be considered. So this ruling came as a huge relief to all the appellants, and this can be used by every appellant whose demand in the appeal order has been substantially reduced when compared to the original order. And already the additional 10% requirement has already been met in the pre-deposit paid in the first appeal stage. With respect to the maximum amount of pre-deposit, it has been capped at 20 crores each under CGST and SGST, and 40 crores under IGST. So what happens to penalty only orders? If it is tax, interest, penalty, the 10% of tax will be paid as pre-deposit. If it is only interest or penalty or only penalty, 10% of the penalty in addition to whatever was paid in the first appeal stage will have to be paid as pre-deposit. Another important point with respect to the appeals filed with tribunal is that the tribunal in its discretion may refuse to admit an appeal for which the demand is less than 50,000. It is at its discretion. If it considers the issue to be of high importance, it can very well take up the appeal even if it is less than 50,000. Now this pre-deposit that we've discussed, that is 10% plus another 10%, it has two limbs in section 112. First is 112 subsection 8 clause A says, any admitted amount has to be paid in 100%, and the amount which is disputed, out of the disputed amount, you have to pay 10% as pre-deposit. So the base is on remaining amount of tax in dispute. Interest, penalty, fine and late fee will not come into effect when there is a tax amount which is to be disputed. However, if there is not a tax amount to be disputed and it is only going to be penalty, it will be 10% of the penalty amount to be paid as a pre-deposit. And what about section 129, that is transit e-waybill orders? It carries no tax demand. Therefore, the base if you consider the base as tax, it's going to be nil. And if that stand is taken and the appeal is filed, the appeal is going to be defective and rejected. See, in most of the cases, the penalty demanded in the order would have been settled at the time of release of the vehicle itself. So therefore, now while filing the appeal, the pre-deposit on penalty is not needed because 100% has been paid under protest. So we are attaching the details of such penalty paid under protest as under the document requirements pre-deposit and proceeding with the appeal filing. In cases where the penalty demanded has not been paid in full, 10% of the demanded penalty will have to be paid as pre-deposit. And what about the ledgers to be used for these pre-deposits? So as we all know, for the first appeals also, the same principles had been used. That is, you can use the credit ledger for tax pre-deposits, but for penalty, it is strictly cash ledgers for pre-deposits. So usually credit ledgers, the tax component of the pre-deposit can be used from credit ledger, because in section 49 subsection 4, the credit ledger may be used for any payment towards output tax. And Circular 172 also does not classify pre-deposit as interest or penalty. Therefore, credit ledger can be used for pre-deposits. And section 107 or 112 for that matter, it does not restrict the mode of payment to cash alone. However, when it comes to electronic cash ledger, interest, penalty, fine, late fee, and RCM liabilities are usually paid through cash ledgers. Therefore, and credit ledger cannot be used for any of these. Therefore, a penalty only order for which pre-deposit is required must also be paid in cash. And when it comes to section 129 order, the same principle applies, not because pre-deposit is a cash only concept. It is not, because credit cannot discharge penalty. So therefore, we have to pay the penalty pre-deposit in cash only. Now, what happens when we've already paid pre-deposit? See, initially during those 8 years, the appeal orders have been coming non-stop, and the appellants or the clients, they were in a hurry to find a solution for this. They used to keep asking us as to when will the appellate tribunal come into effect? Do I just stay with this order? What do I do? What happens if there's a bank attachment? So our first advice was to say, pay the pre-deposit amount, and we will submit a letter to the department saying that we paid the pre-deposit amount. So usually, it was 20%. So many of the clients had even discharged 20% as pre-deposit. That is 20% of the tax in dispute, in addition to already paid 10%. So what happened? And many of the clients had paid 10%. What happens to these pre-deposits which was already paid when the tribunal was not even into effect? So this can be set off against the payment against demand in the liability ledger if the order ID is available in the portal. If the order had been uploaded in the portal, you can use this DRC03 and use the DRC03A to set off this 10% of pre-deposit amount against the said order. This route of order being available in the GST portal has only been provided in this circular. If at all if the order is not in the GST portal, we still go ahead, pay it with DRC03, and we are attaching that as a pre-deposit proof while filing the GSTAT appeal filing. And another important thing to keep in mind is that on favorable order of the favorable orders from the tribunal, pre-deposit is refundable along with interest. And another thing is that once pre-deposit is paid, the recovery of the balance amount in the appeal order, that is out of the whole demand, it is deemed stayed till disposal. No separate stay application is needed. The stay operates by force of law. Now, the third most important and the most difficult criteria of all is the bundle is filed at once. That is, the appeal bundle, it should be filed at once. See, since this portal is very digital and there is no instructions of any physical documents being required or submissions being required, every document that is required for filing this appeal has to be uploaded at once, and it has to be all very correct and as per the instructions. So Rule 112 says no evidence may be produced before the tribunal other than that produced below, save in the specified cases the bundle is uploaded at filing. These specified cases may be due to various reasons such as, but even in those situations, we'll have to get a permission from the tribunal to present those documents after the filing of the appeal on the portal. So what does Rule 110 say about Form APL 05 is that cause, title and complete party particulars should be there. Details of the impugned order, that is order number, date, forum, AR and CRN should be there. Statement of facts should be in chronological order. Grounds of appeal should be consecutively numbered. It should not all be jumbled. It should be in clean-cut paras, and each ground should be short and concise, and it should be numbered. And the prayer should be specific and it should be quantified. And the financial details of the quantum of demand pre-deposit paid should also be mentioned on the APL 05. And what are the mandatory annexures as of now is that SEN, order in original, order in appeal, authorization or wakalatnama where an authorized representative is appearing on behalf of the appellant, proof of pre-deposit and of court filing fee. This proof of pre-deposit is required for both the first appeal and the second appeal. English translation with affidavit for non-English documents wherever required. Where the order is not on the common portal, a self-certified copy within 7 days should be submitted. So the self-certified copy, when you look at the GSTAT rules, under the definitions of such rules, certified copy goes on to say that certification can be obtained from the department or from an authorized representative who will usually be a chartered accountant or an advocate. So therefore, these order in original, order in appeals which are in offline format can be signed by the authorized representative or certified by them, scanned and then uploaded to the portal. And it should be signed in the manner specified in Rule 26. That is, it should be signed through DSE or through Aadhaar e-sign. Another very important point is when one first appellate order, when one APL 04 covers multiple order in originals, the APL 05 should be filed for each of order in original. It should not be one single APL 05. Therefore, keep this point in mind. And some problems that we came across was that for disputes from 2018 to 2022, the order and appeal, maybe the documents were preserved, but all other documents, the SEN, the appeal filed for the first appeal filed, the order and original, any other annexures attached, was all very difficult to obtain. And it was either lost, it was not archived, or it was held by some former consultants. And it was very difficult to obtain all such documents. And the March 2026 scrutiny instructions, it required APL 5 to include SEN, order in original, order in appeal, a separate statement of facts, grounds, and etc. So this missing SEN or OIO is a huge risk because these are mandatory documents, and this will be raised. These missing documents will be definitely raised in the scrutiny. So how do we recover such documents? Check the GST portal. Sometimes it might be there. You can directly apply or request from the issuing authority. You can go through the RTI route, or you can check if there are any GST generated copies. That is, there is no need for separate certification. All these orders that was obtained till now, or if it is in offline mode, we don't, if it is on the portal itself, that is through portal, if you recover these documents, you don't have to get it certified from your authorized representative. You can very well upload it directly. So where it is not on the portal, very important, get it certified and then scan and upload the documents to the appeal filing. So the portal workflow goes like this. You register on the portal, you validate the ARN or CRN of the appeal, and then you prepare or pre-fill the data on all the tabs, that is order details, case details, parties, representative, demand, documents, and everything. You have to complete each of these tabs so that you can move to the next tab. It is not, you can't keep any of the details in one tab pending and then move, because the portal does not allow that. And you finally confirm the pre-deposit paid, and you also confirm the court fee. You either pay the court fee online, or you can pay it offline through Bharat Kosh. Offline in the sense, not at the time of filing the appeal. You can pay it before filing the appeal and upload the court fee document at the time of filing the appeal. Court fee will be 1,000 for every 1 lakh of tax or ITC involved. Minimum will be 5,000. Maximum will be 25,000. For a penalty only order, compute it on the penalty. And sign it using a digital DSE or Aadhaar e-sign. This is a mandatory step. And once you receive, once you filed it, you've signed it through DSE and you filed it, you receive a provisional acknowledgement. Now, does submission mean that my appeal is final? I have submitted and it has been approved without any defects? No, you are only issued a provisional acknowledgement. This is only a confirmation on the date of filing. It only confirms that the appeal has been submitted. If at all a certified copy of all those offline documents is not uploaded within 7 days of filing the appeal, or if it is uploaded later, this provisional acknowledgement will not be useful at all. The later date will be considered, or you will not be allowed to file the appeal at all. And it is only final when you get a final acknowledgement after the registry scrutiny, after the defects are issued by after the scrutiny and you correct those defects. Filing is valid only when part B of this acknowledgement is issued. An appeal with uncured defects is not admitted whenever it was submitted. So submission alone does not mean your appeal is admitted. So the protection given by Part A, the provisional acknowledgement, is only conditional and it is not absolute. You need to get the final acknowledgement, which will only happen after the tribunal registry scrutinizes all your documents and gets back to you with the defects or with the final acknowledgement. So this defect and refiling loop, it is going to be like a defect notice will be issued. You go to the refiling tab in the GSTAT portal. You have to check all the defects, correct, and resubmit, and re-scrutiny will be done. So this will definitely take time. Each resubmission might take around 1 to 2 weeks. So for this purpose, a relaxed scrutiny has been proposed through order number 16/2026 and through rule 123 of the GSTAT rules. So what has been mentioned in this relaxed scrutiny is that the registries can raise defects of substance only, not defects of form, not on minor formatting, pagination, numbering, and typographical inconsistencies. So defects need not be raised. Some substance defects like SCN is not attached, order and appeal is not attached. All these kind of defects will definitely be raised up. If at all there is a GSTN generated, non-GSTN generated, meaning offline document uploaded without self-certification, that will be raised. If DSE signature is missing, that might be raised. So no defect is raised where a higher court has exempted court fee or pre-deposit on proof of the order. Then what APL 05 must still include SCN. Therefore, this relaxed scrutiny, what it does not cover is the mandatory documents to be included: SCN, OIO, OIA, statement of facts, grounds of appeal, authorization letter, limitations, pre-deposit for filing. So therefore, the relaxation does not excuses from filing with incomplete details. When the window closes, full scrutiny returns and every imperfection of form becomes a potential defect. So some recurring errors or some very common errors would be, we might mistakenly choose the wrong bench. Place of supply issues are only taken up by the principal bench located in New Delhi. All other issues will be taken up by the state benches. And sometimes the representatives are not pre-registered on the GST portal. They will need to, they will have to get a separate registration on the GSTAT portal. And once the appellant is filing the GSTAT appeal, under the representative tab, there is a drop-down option. After the representative is registered, a separate name and ID will be generated. The appellant will have to click on the respective representative and go ahead with the filing. Combined appeal, filing one single APL 05 for multiple order and originals, which has been confirmed in one single order and appeal. Therefore, be very careful of this. And also, many of the appellants are getting confused with the forms APL 05, APL 06, APL 07. APL 05 is the taxpayer's appeal. APL 06 is the cross objection, and this does not carry any pre-deposit. APL 07 is the departmental application. And another huge mistake is the pre-deposit amounts being paid. Since there is no automatic payment of pre-deposit like we do for appeal first appeals, the mismatch or confusion between credit ledger and cash ledger and using it for tax or penalty arises very often. So we be very careful on this. These are some of the experiences or issues that we have come across in our filing experiences. And to conclude, we would like to say that the merits of an appeal will be heard only when all these other precautionary conditions have been met. That is the limitation, pre-deposit and documentation. Any deficiency in any one of these, even the soundest case, the strongest case with strongest facts and merits will not be heard at all. So this brings us to the end of this session. Thank you for watching our webinar. Any doubts, please put up in the comments section. We'll be happy to take them up. We have a query with regarding to the GSTAT appeal documents from Mr. Prakash sir. He has said all the major documents are already filed during FA, First Appellate Authority hearings. Since FAA is not allowed appeal, appellant forced to go for GSTAT. In my view, all the documents required to be sent to GSTAT from FAA along with FAA order with his remarks. Only additional grounds of appeal along with documents and additional deposit and fee required to pay. Sir, one point to be noted here is that additional grounds shall not be entertained at the second appeal. Whatever we have been telling till now in the SCN reply in the first appeal will have to be substantiated once again in the second appeal. Any additional grounds we will have to get the permission of the tribunal to state so. But if the grounds are of the same, if the grounds are supporting the facts already provided in the first appeal, you can go ahead. But still, the tribunal looks into your appeal document submitted now to have a look at the whole picture. So it is better and even mandatory to state the statement of facts, whatever has happened till now, and your grounds. In your grounds, you can put this as a ground saying your first appellate authority has given an order with such remarks. That can be one separate ground. But please go ahead and file a separate appeal for this, along with all the mandatory documents, even if it is a bit burdensome to do so. All questions regarding e-way bill and e-invoice, we request you to please mail your queries or reach us through WhatsApp in the number mentioned on the screen. Please send it as a message or through mail. You can, we'll be posting the mail that we use in operations, so you can send the mail to this mail ID. We'll be responding to each and every one of you. See, Arvind Tangan sir is not currently available. He's busy. So please put your queries in the mail. Sir, Senthil Kumar sir, the QR code, if it is not working, please send us a hi on the number mentioned on the screen. We will add you to the group personally. Anybody for whom the QR code is not working, please reach us through this number on the screen. We'll add you all to the group personally. So thank you to each and every one of you for attending our webinar. Any queries, please send it to our WhatsApp or to solutions@zentaxclinic.com, shared in the comments section. We'll be happy to take them up.